Okay, it's 9 p.m. here, 6 p.m. in the UK. That means we start. So this session is about it's more general knowledge. Okay, we're not going to be going over. We are going to be going over patterns, but this is all about actual knowledge. I've been working on this for the last couple of months. And I really wanted to share this, but I don't want to share it in videos. I want to share it with interactions so you guys can understand what I'm going over. If you guys hear any cracking noise, that's my son playing with Legos behind me.
Oh dear.
Yeah, he loves his Legos. And he loves me too, so he doesn't leave me alone. But I love him, so it's all good.
Dennis, since I'm not an English, English is not my native language, you are allowed to speak just somewhat slower.
Okay. Okay. Okay, so I'm going to be going over long and short-term contractions right now and explain to you, starting with the first one, which is the long-term contractions. A very important thing before I go into this, something that I've been pondering in my mind for the last couple of weeks, maybe a month or so, is that we need to understand that we trade in probabilities. So I'm going to explain this like this. There is a random selection of trades that we win. I'm going to put it to you guys like this. Let's say we have an 80% win ratio, okay?
Mm-hmm.
And if we open 10 trades, that means 8 are, well, let's say 100 trades. Based on this, 80 should be winning, right? The problem is that the 20 losers, they do not come at the same time. Nor do the 80 winners come at the same time. There is a random distribution. There's a random distribution of the winners and the losers. Now, this is exactly why I started implementing the structured position sizing back in December 2018, and that really helped me. And Brian is the oldest one here in terms of being a PipsMatter member, and I'm sure you remember when everyone was there, Alex and everyone else, and we were opening trades. We were making 5, 10, 15, 20% a day. Everyone was happy, and one of them was structured position sizing. And then came that day when we just let our, losses ride. we rode with hope rather than. So this session is not only focused on the actual contractions themselves. I'm going to be speaking about a lot of things that I've been working on the last few weekends, and including today as well. So there is a random distribution of profits, and that's very important to understand. And when we understand that there is a random distribution of profits, that means that out of these, 1, 2, 3, 4, 5, 6 trades you see here, they're not all going to be winners. Even though there are contraction patterns there, some of them with breakouts, they're not all going to be winners. This is why we cannot, and I emphasize cannot with very big letters, go in trades and believe that they are going to be winners. We need to understand. We need to be trading without fear as number one. So when we are trading without fear, that's an understanding that, yes, I accept a loss. So when you don't have fear, that means you're going to go buy here and it doesn't work out. And before it even reaches your stop loss, you say, okay, I'm out of this. And you're going to look for something else and you're going to get into it. And you're not going to hold on and fix and edit and check and this and that. Yes, we are reactive in a sense. As the charts move, we move with them, but we need to look for buying and selling sign. Here is NASDAQ, and there is a clear buying sign right there, bullish flag, spike out. And then you can edit this all you want and continue making contractions. That was a clear bullish flag right there. And as you see, when there is a breakout and there is a contraction, it is very important to watch out. And I'm teaching you about the short ones. Very important to watch out for the 13 EMA. You see, we tried to break out of it, we didn't. That's why we need to wait for the close. Price needs to close below it. And then again, bullish flag came right till the EMA, and we went boom, up again. Now we are not reaching the EMA here at all, so there are no selling signs. until we start heading out. There have been plenty of candles that indicate a reversal, but candlesticks are something that are it's just not so important. They are important, but not extremely, especially on the 1 hour chart, as you see here. 4 hour chart, okay. 1 day chart, sure. But even on the 4 hour chart, you can see here. Let me show you. How do I delete this thing? Okay. What the? I can't delete it. I think I locked it, did I? Anyway, there. That's a reversal candle, and the next one was just a spike up. But as you notice on the 4 hour chart, there is no contraction because there is no base for it. Remember, I created a system not because of wicks. I created it because of where price stops. So a valid contraction would be this. You see there is closing price here, closing price there. You do not draw it like this based on the shadows. You draw it based on the close. So anyway, I'm going to go left, right, center, but we're going to come to a conclusion eventually. Contractions, the big contractions, whether that's on a 4 hour chart, on a 1 day chart, or a daily chart, it's irrelevant as long as it's huge, such as this one here. Well, this is 1 hour. Let me find the big one for you here. Let's go on a daily chart and let's go the famous Euro GBP contraction that destroyed my sleep for a couple of weeks. So there is a contraction here. Yes. There is a contraction here. And then we did have a breakout, and we couldn't break the 13 EMA. You see that here. 13 EMA cannot be broken once, twice, 3 times, 4 times. We make another contraction. So why didn't this continue lower? Because there was no surprise to the sentimental or fundamental data. The market is, after all, driven by sentimentals or fundamentals. Technicals are just there for entries, trades, things like this. But technicals don't move the market. The actual thing that moves the market is something actually happening. Now, that something happening is how traders respond, especially the traders with the big money, how they respond to these kind of events. So here, when we had this final contraction on GBP, Euro GBP, you can see that both take profits were reached here. So even if I do this, you can see that 61 and 50% reached. Or even if I make it like this and pretend this is a fake out, you can see that both take profits are reached, filled, and then we continued higher. This contraction is totally ignored and does not exist, it's not valid whatsoever anymore. This is basically what it was. There was the breakout, we couldn't break the EMA, we continued higher, we tested it again, and then we created a new pattern. So this one becomes ignored. This is what I'm trying to explain to you guys right now. When you're looking at a pattern that takes 39 days to form, excluding weekends, so 55 days to form, that's a big pattern. So that really needs a big drive to change, because at the end of the day, at the end of the day, this is an uptrend. To break this uptrend that's taking, it's being built for so long, since here. So it's being built since this day here. So that's 43 days. You need something important, something big. Either a surprise in fundamentals, negative for the euro or positive for the GBP, or some kind of very good news coming out because of through the Brexit camp or something like this, to change this trend and move it back down to the 50%. So when you are trading this, you need to keep in mind that you need to break the EMA. But on the other side, you actually can use this system for trend trading as well, which I don't. I prefer the shorter term stuff. And you can actually use the 13 EMA as a bounce area, but I'm not going to advise that in any way. We just need to understand that we need to break it. So, for example, here, look at this. This contraction here took, so from here till here, took 50 days to form. But if we check the news, we'll notice that on 18th of April 2018, there was something that moved the market, because as you see, this is not a small move. 60 pips, and then the next day up, and then we had a bit of down, and then again up. But the take profit was basically reached on the second day of the breakout, so 1-2. But there was a change, because this, after all, is a downtrend that lasts 50-something days. So you need something to change this. But if we go down to the shorter time frames, for example, here, now I'm going to show you quite a few contractions here. So we have this major one. This is a 1 hour. On the 4 hour, it seemed much better. You have this contraction here, the black one that you guys notice. Now check this out, how long this one was being built. This one was being built for 5 days. Now this is the kind of trades we want to be taking. 5 days, and how long does it take to reach take profit? Let's get the take profit out here. Boom, and then boom. There's the take profit. We'll focus on take profit 1. From the bottom to the top, basically 1 day and 4 hours. In 1 day and 4 hours, the take profit was reached. As it was reached, boom, we go down. And then again, we make another contraction here. I know the chart's extremely dirty right now, but I'm sure you guys are following. So we make another contraction here. Now look at this one. Again, ideal trades. These are the ones we were taking back in January, February, and then I started going into these long-term ones. And I think that's the biggest mistake I've done, but a very valuable lesson, which I'm using now to build on and continue growing. So this one takes 3 days to be built, and the take profit gets filled in after this candle here within 22 hours, not even 1 day. So this is the kind of trades we want to be in. Then we got another contraction right there. Check this one out. So this one goes down and reaches the take profit, right? We were selling this the other day. So it did come back up here, retested the contraction, and went right back down, even reached take profit 2. Now this one took 2 days to be built, and to reach its take profit 1 day, and take profit 2, 1 day, same day it reached it. And then we got another contraction with a fake out to the bottom, fake out to the top. We went back down here, we tested. I'm gonna have to clean this up because I can't look at this. 1 sec, guys. So you can see that the bottom is there somewhere. And then, well, this is what we were trading. Anyway, the stop loss wasn't reached, and now we're pushing up towards the upper zone. Now, I'm sure you guys, if you haven't checked, there is the Australian, Royal Bank of Australia monetary policy coming out overnight, which could seriously help in reaching this, which is about 52 pips away. It's not much. And if positive news is expected from this event, then price action should continue going higher, higher, higher. If there is a surprise, then it can go lower. But this is what I'm trying to explain to you, that we want to be focusing on the short-term contractions because they're more than enough, especially with structured position sizing. That's all you basically need to achieve profit. And if I go to Euro USD, we can see the same thing happening over and over and over and over again. So there is a contraction. There is a possible head and shoulders at the bottom of this contraction. Now, we need to go on the 4 hour here. So on the 4 hour, it all looks good. I need to clean this. So basically this is take profit 1, take profit 2. And you want to basically, what you want to do with the short-term contractions, what you want to be doing is check for key zones of price action. So if this is more important than this one, then that's the one you're going to be targeting. Again, check how long this one is being built. See, it's just 4 days. This is totally fine. This is something that we want to be trading. But if you go on this here, with a massive fake out to the bottom, this one was being built for 30 days. Again, it needs a massive change in fundamentals to take a move up. And I remember we were buying this before. So you can see a possible, this is not really a valid contraction, but a possible one here. And I remember releasing this. And if you guys check the date and go on the Discord trade alerts, or even on the chat, check between 29th of July and 1st of August. and you'll see that we were buying this. Okay, so I'm going to go back to it. Contractions. The longer they take to form, the more important news has to be to change it, and not just the news. There has to be one of two things, or both at the same time. A surprise. When I say a surprise, is the market expects the Bank of England to hold interest rates at 0.5, and the Bank of England raises them by 1%. That is a surprise in fundamentals. And then Carney comes out and says, we raised them because the UK is in a massive recession and blah, blah, blah. And then that's another surprise. And you got a roller coaster of a market. But this is what we need to see in order for take profits to be reached on big contractions. So ideally, you want to find a small contraction such as this one here. That's a little baby contraction. Took maybe less than a day, 4 days, probably including the weekend, to form. And then take profit is reached basically, what, in the same day? Is that a spike to the bottom there? No, it's not. So basically, the take profit is reached after the breakout in 1 day and 12 hours. This is the type of trades you want to be focusing on. If you go on the longer term trades, first of all, you're going to be dealing with all of this. By the time you head over to the take profit, such as this contraction here, take profit, by the time you reach the take profit, you're going to go up in profit and then down and then up, and you're participating in market swings, and they can be dangerous. So from now on, my structure is just to focus on contractions that don't take longer than a week to be built. And there's a very good reason from that, because it's helping me to learn to trade without fear and basically to trade with probabilities. It's much easier to get out of a small contraction if it fails rather than a big one. You know why? I'm going to show to you guys right now here on Euro GBP, because you need to continue editing the chart. The bigger the contraction, the more probabilities for you to edit it. So like here, this first contraction, from what I remember, was something like this. It was something like this, and then we edited like this, and then like this, and then like this. And while I'm doing that, while I continue to edit my chart, I'm in a severe loss, going from, look at this, extra, so an extra 135 pips until it went down. Then it went up again, and then down, and then, and you're stuck in this massive trade. You're basically, holding on to a losing trade. And you can continue editing this contraction all you want. I mean, you can go like this. We're still holding it, and it still looks good. But it's done. You're already in a massive loss. On the other side, if you're looking at a small contraction, you can easily get out of it, because once this bottom is done, and if there's a new bottom, you don't have a contraction anymore. You now have a channel. You understand? So you see, if you edit it correctly from here and there is a new bottom down here, that's it. There's a channel. That means this trade is done. You get out of it, either on the next low or as you see price. So the whole point is to understand that we will be wrong. There is no system that gets it right all the time. Even though this contraction system is a high probability system, it's not 100%. Even if it's 95%, there is that 5%. And over 100 trades, that means we're going to lose 5. And if we hold on to losers, we just need one loser to get wiped out. So that's very important to know. Now, let me see what else. Now, patterns repeat, but outcomes are different. So this is very important. Most of the time, you're going to notice that a contraction is going to reach its 50%, especially the short-term contractions. So this is why we want to be focusing on short-term contractions. Now, I can find you dozens of them on any pair every single day. I mean, look at just here. 1, 2, 3, 4. So there's 4 excluding the big one here. So 4 contractions in a matter of, on one pair, in a matter of basically less than a month, 20 days. In 20 days, 4 contractions. And if you just traded this, you would have profited here, profited here, profited here, and most likely profit here. But even if you're just trading this contraction and not the major one, you would have already reached your take profit, whether this is the low you're targeting or this is the low you're targeting. Take profit would have been hit. Again, it's very important to understand that the fundamental moves create the bigger contractions. Most of the time create massive fake outs, and they can create massive fake outs. This is why, again, a rule, 7 to 10 days, no longer to use a contraction pattern. So we got one here as well. I released this as an alert. That's the take profit. What you can do, and this again, I'm not just focusing on one thing. Another thing that you guys can do is, you see this bottom here, you can target this as your take profit, because this is clearly a resistance. Otherwise, what you're doing is you're doing this, and there's your take profit right there. So it's a bit higher. I don't know if, you know, it's 20 pips difference, but this could be that resistance. The good thing that we see, and again, very important for you guys to understand, notice that there is spikes. So you see price fluctuated a lot at this support resistance level. So that means that there is a very high chance that if this contraction continues higher, then you will take profit will be reached. Now, if I go down to the 1 hour chart and do this, we can see that we also have possible bullish flag being formed. On the 1 hour, it's above the EMA, above the DC, verifying the breakout. This is, by the way, a breakout. When DC, the middle of it, 13 DC and 13 EMA. I used to use this in my old system, and I re-added it here. And then here, the good thing is that the don't chain channel, the middle of it, price tends to rally back to it when it breaks out. So check this out. So price breaks from the don't chain channel, and in no time comes right back to it. So this is very important to know. The breakout from it and comes back. So that's the good thing. The good thing is that the DC on the 4 hour is far away and it's above our take profit, meaning that there is a very good chance that this take profit will be reached. Another point, there is spikes around this, showing that this support resistance can easily spike up and then come back and close down here. Now, we don't care where it closes as long as it comes here, right? So it's all about making money. I'm actually showing you what I'm doing, what I'm going to be doing, and what I am doing. I've lost my checklist. What I'm doing in the markets these days, I prepared on this this weekend. So I was very ready, and I am still very ready to get going with this. So it should be good. But it's very important, extremely important, to spend a bit of time on the chart and understand what you're targeting, where you're targeting, and then just be reactive to the chart, because there is a probability of losing. And the mindset that you should approach each trade with is that there is a very high chance that it's going to be a loser. So even though the system has a 70-80% win ratio, even 100 sometimes, week in, week out, any given trade can be a loser. There could be news, there could be an earthquake, there could be a bomb, there could be whatever, and that could move price abnormally and take you into deep losses. So what we want to do is approach it as this trade is a loser until take profit is reached or you get out of it. So while it's active, it's a loser. So don't relax and don't get excited if you see this happening. So you enter the trade down here and it goes boom, and it skyrockets 60 pips, and you're like, yeah, you know, everyone starts getting excited, and toop, you're back down to 17 pips, and then you're back down to 6.5 pips. Don't get excited. This is not an excitement game. When you take your profit of 120 pips and you get out, then pat yourself on the back, crack open a beer, you know, go for a run, do whatever you like. But it's very important, while you're in a trade, that trade is a loser. Even though it's in a profit or not, it is a loser until you're out of that trade. So do not count on it in any way. Yeah, as you see, the sentiment here is driving AUD up, so it should continue going upwards. Now, the take profit here is of this contraction, the major one, right? So this the take profit that you notice here is that one. Now, again, you want to spend a bit of time and analyze why there, like what is there. So we notice that there is this here. then we have this here, and then that there. So I'm gonna show you guys. First we have these spikes, then we have this resistance, and then again that resistance. But we also have this on its way up. It's gonna have to pass through this here, right? Where we stopped last time. So you guys need to understand that nothing is guaranteed 100%. I can tell you that very close to 100% is the short-term contractions. They work like clockwork. They're just great. The big ones, even though bigger profit can be achieved, you need to understand that you see here, you went up and you almost reached it. Check this out. It almost reached the 50% and then boom, 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 back down. Thankfully, it made another contraction. It went back up. But then it made another bearish contraction and it went down. Now it's going up. But it has to pass this major resistance before it goes down. So in regards to like long-term and short-term contractions, I would highly advise you to totally ignore this. Just focus on the little ones. Take this little thing here called the date range. I think you can find it right there. So you got the long positions, the forecast, the blah, blah, blah. You want to take the price range, the date range, click on the little star. It's going to pop up here. And then when you find the contraction, and let's just go and find one here. There's bound to be one somewhere. I mean, it's hard to spot them like this, but they're always around. So this looks like one right there. So you see this, and then what you want to do is get the date range and check this out. Okay, 8 days. 8 days is good. Anything below 10 is perfect. And then what you want to do is get the fib retracement, take the bottom, take the top, grab this little thing here. Boom. Now, where does this line up with? Lines up with this level here, right? 50% lines up well with this level right there, which is clearly an important trading level. And we can see that here, 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 and here. So if I do this line, see? Support, 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 resistance, 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 support, 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 support. So that's reached pretty quickly, right? On the breakout, it took almost here after 20 hours, but officially reached after 1 day and 16 hours. And then TP2 is reached 5 days later. I would not target TP2, but if you check TP2 as well, you can clearly see that they usually line up with key trading levels. You see here, this level here, which is also an important level. If you check into the past, and you see it is clearly a nice resistance level, turned into a support here, bounced up, went down. So yeah, these are the contractions you want to be looking for, and every day, pretty much every day, we can find one. And here's another one, like just right before this one, we got another one right there, and it looks okay. I mean, the way you would understand this one is a valid one. You want to use a bit of candlesticks. You want to check the RSI as well, and see if that's low enough. But we have a little reversal candle here, and that would basically be the indication to get into this one. And how big is the take profit here? Let's say you would enter there. Yeah, 38, 40 pips, perfect, right? If you use correct position size, it's all great. It doesn't matter. You don't have to go for grand slam home runs every day. Think of it like this: one lot at 40 pips is 400. You know, half a lot is 200. You know, so it just adds up. Now, contractions can be found on each and every single pair, and I can find you really big ones as well, and really small ones too. But the problem with big ones is like here, this could look like a contraction, but you might get stuck into this one, right? So check this out. So you would draw this like this, and you say, oh, wow, look at this big contraction there, blah, blah, blah. And look, it looks perfect, right? It looks great. It all looks beautiful. Almost made a breakout here. I mean, we would start selling here. It went up. We would start selling, and then, you know, and then you come here and you're like, oh, there's a sideways head and shoulders, you know? We got every reason in the book to be in this one. And you start selling, but your take profit never gets reached. See, very far away, never got reached. So that's what I mean. We need to be focusing on shorter term contractions. And that's pretty much it. I mean, check this out. I mean, there's another one right there. So the most important thing about a contraction is its body. We need a spike up to create the top, right? And then we need a spike down to create the bottom. And there's one right there. You don't need to ride the whole move. Like this is more than enough. Imagine selling from up here right down to the 50. That's 60 pips. Hoorah! You know, you grab 60 here, and then you wait a little bit, and you find another pair, another trade, and you continuously find setups. But you will also draw contractions which won't work out. Check this one out. This is why it's extremely important to take the mindset of each trade is a losing trade. So you would have gone and stopped out. I mean, you would not write this because look, you have a breakout here. Take profit is never reached, by the way. See? So you have a breakout, you have a retest, reversal candle, gap down, price goes up, retests, pushes really hard, and continues to try to come to the take profit, even though very close to this out. Oh, it came real close to the take profit. It was never reached by just 7.2 pips. It was never reached. And then very quickly, it spiked right out of here, and then eventually it reached it. But that eventually, this would have caused you a problem. Because you would not have a stop loss of 73 pips just to earn 46, right? So this is what I mean, like patterns fail. No matter how good this is, it does work out, the patterns just fail. So you see we got another one right there, and that's reached. So these contractions, they're just beauties, but again, you need to understand that they're not 100%. They're close to 100%, but they're not 100%. So I can continue drawing them on many occasions. What we want to do is a bit of live trading now. So let's do a quick scan. First of all, do you guys have any questions?
All good from me.
Superb. Okay, I guess no one. So yeah, the main message I just want to push across here is how to understand and look at these contractions. Forget about the long-term ones. Really forget about them, because you will find a few of them that are really going to work out, like the ones on S&P 500 a couple of months ago, and the DAX, and that really worked out well. But again, you need to understand that the higher probabilities and the short-term ones, and it's also much safer to trade them too. Okay, so NZD USD. Let's go over this very quickly here. But I'm expecting that the what's it called? The RBA is going to do something positive for the AUD. Now, if they do something positive for the AUD, it should take up NZD USD too. Now, the contraction on NZD USD point from here to here is 35 days. This is a long one, you see, and this is problematic, but it's okay because we have a shorter term contraction, the blue levels right here. So this looks like a solid one. It's bound to bounce out. The problem is we have this here. So clearly a nice little resistance there. It is far away, 77 pips away, not too bad. This one here should continue higher based on what based on what I showed you before with this little pattern. But what you want to do is, if you want to enter this, what I would advise is, see that 25 minutes? Wait for this candle to finish, because it could bounce out and then bounce back in and close with a little bullish pin bar. It could just close down and just close below. So what you want to do is wait 25 minutes, game of patience, and then you could easily ride this baby to the TP number 1, 50 pips away. Then we go to AUD NZD. Now we had a breakout here, but you see we just couldn't break the EMA, and that's one major thing we need to break. Remember that the EMA is always further, and when they open up like this, the EMA and DC, that's really, really good, especially when the DC is below take profit number 1, which is this green level here. And let me show you this now. So we got the top right there. And the way to understand this is a top as well is we have this little indecision candle right there. So that's a perfect entry. But again, you need to wait because this is the first top. So what could happen is this. You need to remember, you want to be reactive. So we could make a new top, creating a free higher high pattern. 1, 2, and then somewhere up here, number 3. Now, if that happens, that's your selling point. Free higher highs connected with a trend line, easy. I mean, if price action closes there. So we don't know yet if this is the contraction or this, but anyway, we'll find out. Okay, so I wanted to keep this one light. I just wanted to spread that message across and just explain to you guys how important it is to focus on the short-term contractions. Really spend a bit of extra time there to make sure that you are actually focusing on the short-term ones. It's very easy to get distracted, very easy. I mean, when you fall into a routine, extremely easy to get distracted. So focus on the short-term ones. Remember that patterns repeat, but the outcomes of the patterns do not repeat. And they're always different. And every single trade is unique. There is not a single trade that you will open that will work out exactly the same way as before. Because every situation is different. And every day is different. You all know that. So this means that we need to approach every situation with complete focus, attention. We need to be ready. Create a little checklist for yourself. I cannot intrude into your day and tell you what to do with that checklist. I will be disclosing mine in the next session, which is on Wednesday, and I'll explain to you guys how that's working for me and what I'm doing with it. So I'm going to be done with this session now, just a power-up session, about 40 minutes, more than enough. We're going to start doing this weekly, 1 education session minimum, and then we're going to be doing live day trading sessions for news. So let me explain this to you very quickly. These contractions, they work with news events very, very well because that's what really pushes them. So let me just find something here for you. Yeah, I can't. Let me just do it like this. No, not like this. Let's do it like this.
I've got a question for you at some point, Dennis.
Yes, go on now. Tell me now, Brian, until I do this.
The DC indicator that you're using, so we can see the 13 EMA on the blue of the chart, the blue line. The DC indicator, what parameters are you using there to generate that black line? Or can you share that at some point in the future?
Yeah, no, they're number.
So
they're 13. They're all 13. Let me just check.
Oh, that's 13 as well. Okay.
Yeah, everything is 13. But why is this? How do I do this now? 1 sec. There. Styles? No, this is 30. Why is this 30? Yeah, okay. So the DC is 30. The DC is 30. RSI is 13.
Mm-hmm.
Let me just make sure this is all correct. So the EMA is 13. The DC is 30. The DC is 30, but I'm just using the middle. You see, not the upper and the bottom, just the middle.
No, that's fine.
Yeah, and I want to count. When we use 30 is the one that I was using before, even for the EMA. Oh, yes. So here, I'm sure quite a few people remember this one. This worked out really well. So look at this. We've got quite a few contractions here on, and this is the S&P 500. Now, indices are pretty cool, but they're quite dangerous, and especially when you come into this kind of territory. Here, very abnormal market movement, massive crashes, massive rises, quite dangerous to trade. And the best thing about this is no patterns. There are no patterns. And what you guys want to do with this is, let me just see this. No, it's not. What you want to do with this is find the contractions on the 4 hour. Always find it on the 4 hour. When you find it on the 4 hour, it's more valid, it's reached easier. And I'm going to show you a little secret that I do with charting, with drawing lines. So here, you look, bring your attention to this candle over here. So this is the close, and this is the next candle. What I would usually do is cut that green one out and do it like this. If you guys understand, I'd focus on the basis of the contraction to be this first candle, not the second one. I wouldn't draw it like this, but like this. And then the same would go for the top. You want to get the top, so that's the top, and then you want to grab the middle of the contractions. And that way, at least to me, it becomes more accurate. I've been testing this on for a while, and it actually really helps me. You can see me doing it here. And then the breakouts are, well, I get a jump start on the breakouts. Yeah, that's pretty much it, guys. I wanted to share that main message that contractions that take a long time to be built, such as this one. One sec. See, 40 days. You need a major change in fundamentals. And this here, gents, is, sorry, that's my little puppy that's 25 kilos already. Yeah, so here, Trump tweet. If you guys remember that, April, starting of May, Trump tweet, market crashed, reversed, crashed. That's the beginning of the trade war. Not the beginning of the trade war, but that's the actual, you know, when it actually started having an effect. And then price went back down. And then we had another contraction. As you guys can see, it took a long time to be built, another 60 days. But there was a new high and another contraction on top of it. So this could be seen better on a daily chart probably. And then price tumbled again down. Fortunately, I missed this one and I missed this one. But that's okay. Yeah, guys, so that's it. So I'll see you guys on Wednesday. We've got 2 sessions on Wednesday, I think. We're going to be focusing on trading the news. If there is nothing happening on the news, then I'm going to try and find another pair. But each session will have a very specific trade, which I spend quite a bit of time on to analyze and prepare. Thank you. Have a good day, evening, or morning, wherever you guys are. And I'll see you guys tomorrow again in the community.
Okay, thank you, Denis.
Thank you, guys.
Bye.
Thank you.
Bye.